Alrighty, traders, John Howell here. Do or die in the markets. S&P 500, actually a lot of the indices, a lot of green across the screen today. We're at a do or die situation. I want to give you some levels to really keep an eye on for. But we're at a bit of a do or die situation of what's coming next. And the same for the mining sector as well too. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Traders, if you need some help, I'm actually running a sale to my trading course, $7. And that's actually called the Breakthrough Trading Course. If you need some help, this is the main stuff that I use to take me from losing money to actually making money in the market. So at least it's going to get you on the right foot. And if you are getting chewed up in these markets, I promise you video number 1, which is about the mistakes and the foundations, is going to help you so much. So I just don't want you to be part of the 90-90. 90-90 is that 90% of people blow up their account in 90 days. That's the 90-90 rule. That's the whole thing out there. It's actually probably a lot quicker, especially. It's actually probably a lot quicker. It's probably 90% blow up their account in nine days, especially with the volatility lately, okay? So anyway, so let's have a look at the S&P 500 and then we can go from there. And so I say do or die. Let me actually take off the moving average here for a minute, because the most important thing, traders, to your trading is the chart itself. A lot of people, and listen, look at this here, traders. I used to trade the markets like this. Okay, I used to trade the markets like this. I'd have the RSI. I would have, the stochastics. Oh, here we go. We're oversold. We're oversold. The market's gonna sell off, and yet the market would rise another 4%. You know what I mean? It's like I used the stochastics, and I still use volume to this day. Not much, actually. Not really that much. I could even just do away with volume. Actually, when I'm trading my forex and futures trading, and even my crypto trading, I don't use the volume, and I hardly even use the volume even on the stock market, because the most important thing is the chart. But I would use, as you can see, there's probably a faint line here. That's the Bollinger Band that I used to use as well too. So this is pretty much what my screen looked like when I was trading, right? Because the reason why I was doing all this is because I was trying to find the edge. And if you really think about it here for just a minute, okay? Think about this here for a minute, all right? We spend so much time looking at this stuff here to try to find that edge, right? I want to find the edge in the markets, and I want to use all these indicators to tell me when it's a good time to get in, and so on and so forth, right? We want to use that edge. But if you really think about it, there is a 50-50 chance of the market gonna go up or down. It's actually not that hard, right? And when I started to really conceptualize, is that the word? What does that even mean? It just comes to my mind with the sentence that I'm using right now. Conceptualize is that once I started to really really understand that okay. And the problem that I always had by using these here is that I was always in doubt. You know what I mean? Sometimes the market would go for a big move and I was always in doubt. So if I look at something like, especially, like the energy sector, right? The energy sector, same thing. When the market continues in a very strong upward trend, there's always this, oh my goodness, we're getting negative divergence here, and that means the market's going to sell off, and and then it doesn't, or you might get some bullish divergence. Oh look, here's some bullish divergence, and so on and so forth. There's what the indicators did for me by trading the markets is it created a lot of confusion. It's like, okay, I'm getting a breakout now, or I'm getting a pullback here. Is it a good time to buy? Well, the stochastics and the RSI is oversold, so sure, it's a good time to buy. And if you actually use that method back in the Rona days, let's go back to this, right? Back in the Rona days, look at this here, and this is where it gets so like, huh? What? Right? So I know people that would have used the indicators and said, oh, look at this here. The market dropped. Oh, stochastics way oversold. Here we go. right? We're boom, here we go. And look what happened. Like a 2-3 day little pop and then dumped. And then this is what so that's where like, it's like, okay, by using indicators, sometimes I can give you like false little thing. And sometimes in a very big, strong move, you may even get out of trades. Like here, look at this here. That was pinned. Let me just go back to that point through there. Right, just like here, the stochastics was actually pinned all through this point through here. But what actually happened to the stock market? You know, we had a 5 or 6% rise. So the indicators that I used to use, it just created so much confusion for me. Because the thing about trading is about consistency, and consistency of the market you trade, and consistency of the method you're trading, right? The approach you're trading. You gotta have some sort of method to that. So that's the reason why I don't use this here, right? What I do is now my trading looks like this. Well, you know, actually it looks like probably something like that, right? And probably even, as I said before, probably I can even do without the volume. I don't really need to know. I don't need to know the volume. I need to know the flow of the markets, and therefore I need to be able to see what's going on here. Okay. So if you are trading the markets right now, which you probably are, no duh, John, and you're having a hard time, then it actually took me a long time to actually, I heard that so many times, you know, in my first few years, you know, like the less I actually had on my chart, the more my profits went up, but it's actually true. And so now, as I said before, most of the time, I'm just looking at a chart that looks like this, and even forget the volume. Like I don't need the volume. I'm not even using the volume. I'm just using the chart. Why? Because I'm using it to see what the market is telling me. And then when I'm reading the markets, guess what I'm doing? I'm not just trading based off so I'm going to do an update today, and here's my update. Hey traders, so there's actually a bit of a do or die situation here right now. We actually had a bit of a double top through here, and we're actually right at this resistance line right now. So it's like a bit of a do or die right now. Is this a little fake rally to the upside before it starts to do something like this again and starts to knock it down? If so, we're probably going to make a new low through here, but that's probably only it for it. Okay, to do or die. But if for some reason the gods come back in and hold this level, and we start to make, this overall is now a up and then down, higher, low, and then we start to break above here. If we do something like this, then guess what? We're off to the races to the upside. So by looking at this chart here, I can see that we're not out of the woodwork yet. It's like, is it going to drop down, or are we likely to start to see this being a significant higher low? Because it actually, if I bring up my good old Fibonacci tool, my Fibo tool, and we go from the low to the high, you can see it's actually held, that's that, as you can see, it came down to the 60%, but you can see that 50% level is definitely a lot of confluence and convergences and a whole bunch of down home country supportness, country goodness. Right, you can see that whole level through there was indeed, which is a 50% retracement, which is indeed a strong move. So if the market does hold here, and then we start to make a rally back up towards above here, that's going to be what? This here is now going to be a major higher low, and then it's going to be doing something like it's going to go down, we're going to go up, we're going to go down and up, and then we're probably likely to make a breakout. As I said, I overall see big moves coming. I see a new high coming over the next few months, but if this is not what I'm talking about here, and it's just a little rejection at the resistance level because it's a do or die situation, if we do roll over, we're probably likely to come back down and make a new low through here, flush down through here. And then once that happens, then we're probably likely to make a move up. Either way, we get a flush down and then a move back to all-time new highs, or we continue to the upside. So traders, obviously I just did a little market update for you just there, right? The do or die situation. So, but one of the most important things, traders, to trading, right, is like, okay, I know a lot of newbie traders, they're like, okay, John, so how do I trade that? How do I trade the information you just gave me? How do I make money from just what you just gave me? I just gave you a market update, right? Or an update on the S&P, right? It's not really a market update. You know, it's not really a stock market, is it? It's a market of stocks. If you think about it, you know, you don't go to the, Actually, yeah. Well, actually, I was going to use like a seafood market. It's called a seafood market, market of seafood. You know, it's like, so the important thing is trades, like just because they gave an update through there, a lot of newbie traders might think, I'm looking for a trade. Okay, this guy says the market's he's gonna go to the moon. I'm gonna trade this. I'm gonna buy some call options on the S&P because he said this thing's gonna go to all-time new highs. So here we go. No, wrong, right? I give you an update through there, but your decision to get into the market should be based off a pattern, a system, something, right? And again, in that trading course or whatever, you can learn or do all that, right? But it's that approach. And I just had someone contact me recently and say that he blew up $300,000 for doing the exact same thing that I just mentioned just there, which is probably just trading off the seat of his pants, trading off a whim or a hope, or trying to make millions of dollars really, really quickly and loading up so much money really quickly. And there's no consistency, rhyme, or reason to any sort of pattern in the markets out there. So keep it simple, traders. And make sure that you are looking at the markets as reading the markets from a bar perspective, not from an indicator perspective. Remember, a lot of the indicators are lagging, right? So they're not really giving you good insights of what's to come, where the market can give you a lot more insight of what's going on. If I move down now through to the mining sector, and we're not out of the woodworks yet with the mining sector as well too. We can see that on looking at this weekly chart, we're still in this overall sideways range through here, right? So you can see we're just really overall sideways through here, and we're not out of the woodworks yet when it comes to this here. So we really need to start to see this thing break up. I'd have to say for this thing to start to change, that word? There you go. For this thing to start to change tune, we really need to see the GDX, the gold mining sector, right, break above this $35 level. You can see we're really stuck in this range here. We can easily still sell off here and go back down to the lows here. Again, we're not out of the woodworks yet, but we really need to see this thing break above. Once we get back above this 35, then the trend has started to change. Because right now the trend is this way here. We had a move down, move up, move down, and now we're just doing that through there. So this could, I don't know, this could be another lower high before we break down through there. Or we could go through there and then actually change the trend, break through this high. And if that happens, then we're probably likely to start doing something like that. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.